One of my favorite YouTube presenters is Alex. He runs a channel called Ticker Symbol U, Y-O-U, and I think he does a tremendous job. I had the good fortune to meet him a couple of years ago at a conference in Orlando. He does a terrific job. He's a very concise and direct presenter, and he and I share an interest in focusing on the AI stocks that are going to change the world. And so when I saw his video that said he was going to share with me his top 10 stocks for 2025, I said, I got to watch that because I have my top 10 stocks for 2025, and they turned out to be totally different. We only, of our top 10, we only have one that is in common. And I think there's a lot to be learned from this, depending on the way you want to invest. I own all but two of his top 10 stocks, but they aren't my top 10 holdings for 25 through 27. That's where we differ. And I think there's so much to be learned from this. I want to go over his top 10 for 25 and compare them to my top 10 for 25 through 27. Watch this. I chose to do this video on comparing Alex's top 10 stocks for 2025 to my top 10 stocks for 2025 through 2027. Now, that is to say, when I say top 10, where I see the best growth opportunity in 2025 to 27. I own all of the stocks, and I'm showing them here, his top 10 picks in yellow and my top 10 picks in bright green. I own all the stocks he has in his top 10, except for one, or actually two of them. He owns Fortnite. I do not. One of his largest holdings is the Vanguard Growth Fund. I do not own that. And then with the only stock that we commonly share in our top 10 picks is that of NVIDIA. He has it as his number 2. I have it as my number 4. So with that in mind, I said, okay, again, he's very sharp, and he's a better presenter than I am. But again, he looks at it from a different angle. So I looked at his to learn. And here's the difference. He's looking at market share. He looks and he is holding Amazon because it holds the biggest market share in the online merchandising business, online sales. He owns Broadcom because, again, they are kind of the leaders in the architects of non-NVIDIA chips. I own them, but I don't see the growth opportunity there. I have divided the market, the AI, the chips, the data centers, the cloud service, the cybersecurity, and enterprise software into those who are building out the system and those who are going to deliver the system. I would argue with Alex that Amazon is not going to have the growth that IREN is going to have, because IREN is building one of the largest data centers here in the United States, and that is going to give them exponential growth. It's saying their growth, they're going to grow their revenues or their earnings per share by an average of 242% over the next 3 years, whereas Amazon is going to grow at 1/10 of that, at 20%. So my argument to Alex would be there's greater growth potential in IREN than there is in Amazon. Or what's his number one stock? His number one holding is that of the Vanguard Growth Fund. It's grown anticipated growth of 28%. And again, IREN is 242%. So there's better growth potential. The other thing that I look at, that I see that he doesn't look at, because I believe as a stock is going to grow, the company has to do two things. Number one, it has to gear up for the growth it's going into. And that normally means taking on debt or spending money on research and development and hiring people. So I look at every one of my stocks and say, in the past 3 years has their workforce grown? And I give a emphasis as a tell that tells me that they're seeing growth in the future. They're predicting growth in revenues. They've increased their workforce by 269%. So they're growing. So I believe that those two things coming together tell me this is another NVIDIA. It's going to dominate its place, but it's going to give me a much greater return than NVIDIA and or Amazon or Broadcom or CrowdStrike or Google over the next 3 years. Now, again, I own every one of those, but I see them giving me the big payoff, not between now and 2028, but be from 2028 and beyond. Because that's when they're going to start charging me for the AI that they're delivering me. It will be in the form of a $19.99 a month or a $29.99 a month, some form of AI that says I can't live without, much as I pay for my internet service, because it's something I can't live without. And that's where I think the Amazons, the Broadcoms, the Googles, the Metas will come into play. Palantir now is a different subject. This is a software and cybersecurity company that is growing at a rate of 23% per year over the next 3 years, but it has a PE ratio of 89 or 86. That tells me that based on their 23% growth or in earnings, it's going to take me 86 years to accumulate its current stock price. So that is not something I want to invest in and until its PEG ratio comes down closer to 1. So that's how we're different. Again, he's looking at market share. I'm looking at market opportunity for growth. He's looking at market cap. I'm looking at fair price. Okay? Is the price fair? And I don't believe Palantir is fair right now, so I don't want to own it. He's looking at dominance. I'm more interested in depressed stock. A stock like AEHR that's down 63%, but it is an essential part of making semiconductors in the future. So I see that as a tremendous growth opportunity. And the reason I know its growth rate is not that high is because they're actually, this year in 25, they're projecting a low growth and they're showing a substantial growth in 26 and 27. So that's how we look at them differently. Again, my stocks are geared towards the potential growth, and I take a lot of guidance from their 3-year employee growth and from their 5-year past performance. I look at a stock and say they in the past grew at an average over the last 5 years of 172%. That was because they were doing a tremendous amount of business with people who were making semiconductors for the electric vehicle market. If that comes back, if Donald stimulates the electric vehicle market and the semiconductor market, AEHR is going to achieve some tremendous growth in 26 and 27. And so that's why they're my number 5 stock. So that's how we approach it differently. I'd like to share this with you. It's a part of the program that I put together in my what I call my gold platform, where we get together, we discuss things like this, we discuss why do I invest the way I do as opposed to the way Alex does, and you can make your decision as to who's on cue and who's looking at it properly. Okay, I hope that is meaningful to you. Again, I would encourage you, if you aren't watching videos put out by Alex under this, the channel ticker symbol U, YOU, you should. Because he's good at what he does. He just does it a little differently than I do. Check out our website, Best of Us Investors. And I'd love to give you an opportunity to come and try our program. It's normally $19.95 a month, but I'll give you a 14 days free trial, and you decide if it's something you want to be a part of.